The most effective trading system or strategy in the hands of an unskilled or undisciplined or impulsive trader, it is a tool of destruction. It doesn't matter how well or how good the strategy is I will give you. On the end, it will be you making it fail or work. If you are undisciplined or you are not skilled enough to trade that specific strategy, if you are an impulsive trader, I can guarantee you that very great strategy will lose you money. So this video is all about designing a strategy or a method. Things you must look at and things you must be wary of and things you must do and mustn't do. It is important to construct a set of rules that are closely knitted together but not collinear. It doesn't help you've got 5 indicators up on your screen and they all have the same mathematical basis, or they telling you essentially the same thing. Remember, what is an indicator? An indicator is only mathematical calculation or manipulation of the data that you see on the screen. The open, the high, the low, the close, and the volume. That's all that an indicator is. Indicator is just a calculation, a mathematical manipulation of those 5 big things. So it doesn't help they all have the same mathematical basis, because that means that your answers will be the same and you'll just have one indicator confirming something else. And that won't help much when you design a strategy. Now, the first and most important aspect of a strategy, in my humble opinion, is strength. If you can determine what is the strongest currency or the strongest share or the strongest cryptocurrency or the strongest index or the strongest instrument you're going to trade, you are 60-70% there already. So the first thing you need to determine is the internal or your external strength. Now, I love external strength because that brings a lot of new information into your trading strategy. Yes, internal strength is important, but I personally feel when I look at the markets in the morning, I first look at external strength, comparing what you're looking at the outside world, at other currencies or other shares or other indices. And then after that, once you've identified the strength that you want to trade, or you calculated the strength you want to trade, that's when you start to look for a trend. Because that's the second most important thing when you are trading, is to find a clearly defined trend. Not just watching the charts and saying, well, it looks bullish, or seems like it made a new high there, I think the trend is up now, or it's making new low there, the trend is going down. Yes, that's legitimate stuff that we look at. But you need a clearly defined indicator that will clearly show you the trend is up, the trend is down, or the trend is neutral. That you can follow that trend, combining it with the strength of what you are looking at. So if you know that something is trending up and you know there's a lot of bullish strength behind it, well, then the next issue becomes a little bit more easier, and that is the entry setup. So that is the next important thing when you design a strategy, is to have a very good entry setup. Now, entry means you must have specific rules when to take the trade and when not to take the trade. What setups to wait for, what things to look for, what things to be worried about, and what things you will have to do when your strategy gives you an entry. So the entry consists of when will you buy exactly, where will you buy it exactly, where will be your stop loss, your position sizing, and also your target setting, and how will you trail your stop loss or manage your trade as it moves against you or for you until it hits target. Remember, entry needs to be clear cut. It needs to be very, very precise. The rules must be very clear, that you always know what to do next. And once you've now done everything, you've got the skill and you've got the discipline, and you get rid of all the impulsiveness, and you set up all the indicators on your screen that you're going to use to make sure they're not collinear, and you're making sure that you don't use anything that's got the same mathematical basis. You've got something for strength to determine the strength for you, to show you which direction to trade, the trend, clear cut, and you get an entry and you exactly now know what to do. Prepare for anything. because anything can happen after that. You can take the best trade in the book and then something will happen. So be prepared for anything outside of your strategy. Even have rules for when you don't have rules anymore. So make sure that you are prepared for everything. As long as you stick to all your rules, most of those unprepared things, you will be fine with it. But usually the unprepared stuff comes when you don't follow your rules. So once you've set this all up, make sure that you follow your rules. And always, when you prepare a strategy, or when you test a strategy, or when you start trading a strategy, understand that losses are part of the game. Any strategy, good or bad, will have losers. So get used to it. Remember, the best trades will take time. Don't rush the market. Give the market chance to breathe in and out. It's a living organism, the market. It breathes in and it breathes out. If you start to breathe in and you never breathe out, you're going to die within a few minutes. So it's very important to allow the market to breathe in and out and in and out. And that's the rhythm of the market. As the market builds the rhythm towards your target or towards your exit levels, it will breathe in and out. It will not go in a straight line. Okay, I know it happens every now and then. And I must admit, I love it. I absolutely love it when I can be in the money off the bat and it goes straight for the target. The problem with that is we get so addictive to that kind of feeling, that type of trade, that we don't want to have the difficult trades. We don't want to have the trades anymore that doesn't go straight to targets. They are far and few in between, so get used to it. Because usually what happens, once you've seen this fast one that flying this, you took this long trade and it's got 3, 4, 5 long white candles and it's to the target. You love it. Everybody likes it. The problem is we try to recreate those trades because it's nice. So what would happen next? You take another trade, and the moment the trade starts to pull back a little bit, you exit the trade. And that's when you start to step outside the boundaries of your rules. That will make you fail in the markets. Remember that trading is a process. You aim for consistency, not for short-term profits. You aim for consistency over the long term. Stay away from this quick profits. And I will first look after the big profits. No, you look after long-term consistency. That is what the market is all about. Now, when you design a strategy, there are two main things that I use with everything that I design, or everything I design for a strategy. And it's going to be very simple. It's what to trade and when to trade it. Anything I do consists of those two questions. Now, the what is the trend and your strength. If I know a specific instrument is trading bullish, I got a trend that is bullish and I can see that it's outperforming a bunch of other instruments or currencies. Now, I will show you later in the course. I'll show you exactly how to do that. But for now, just understand, if there's two shares or two instruments, I want to be long in the strongest one. And if I want to be short, I want to be short in the weakest one. So that is the what. Now, the when is your entry. That is now exactly when to get into the trade. So before you get to an entry, mostly people always want to know, when do I enter? Where do I buy? Where do I sell? No. You do your analysis in the morning before you start trading. You do your what first. Once you got the what, then when becomes really easy. Because that's when you get these nice entries, these textbook entries, because you got the what, correct. The what is the trend and it's the strength. You're trading in the direction of the volumes, right? That's what you are after. The problem is when you get that what wrong, that is when becomes very, very difficult. That's usually when people trade candle patterns on its own. They don't have a what behind it. They don't have a trend. They don't have strength behind it. They just see this big bullish engulfing and they want to buy, and then it just keeps on failing. And then people say, yeah, but candle patterns doesn't work. No, no, no. Remember now, when you get that what right, when becomes easy. I can tell you, even if you have what right and you make a mistake on your when, the trend will usually come and dig you out of trouble. all right? But if you get that what wrong, I can tell you one thing, your win becomes a nightmare and failure surely your destination. Now, any good strategy must consist of a few things. You must look at money management. We've covered a whole video on money management. You must manage your attitude during your strategy. You must manage yourself, your psychology. We've done that also a video on. And then you must manage your position. As a part of a strategy, people usually look at entries and I will exit whenever I've got enough money or something like that. Now, when you enter a strategy, you need to know exactly where's the stop loss, and that's what your strategy will tell you. Where will you put your target, or how to calculate your target? But then more important than that, I think it's the most important thing, is how to manage your position. When to maybe do an early exit if that is part of your strategy. When to trail your stop loss, that's the one I use the most, is at which point, what must happen on the chart that will get me to bring that stop loss to entry or even into the money, and how to manage that specific position from entry to target or from entry to stop loss. I think that's the most important thing when you develop a strategy. Do not neglect your position management. Right, too many people focus on the entry. They seldom or never, but they do focus a little bit on targets, when will I exit, but they forget to look at how to manage the position while you are in the trade. Remember, once you've entered the trade, you can do nothing for that trade. You can only sit and watch and hope that other people push that trade to your target levels. And remember now, trading is not about your opinions. It's not about predictions or thinking. Every time I say I think the market's going to do that, I can just as well do the opposite, but that's when I lose money, when I start to think about the market. But your opinion means nothing. The market don't care about your opinion, nothing. Remember now, when you developed your strategy, when you back tested it, did you apply your opinion of the market at that stage? Did you go to your emails and read all the predictions you received from these market commentators? Did you sit there and say, well, I think the market is going to do this and this and this? No. When you developed your strategy, you sat there with a set of predefined rules and you say, all right, this is what I would have done. This is where I would have gone long or short or whatever. This is how I would have trailed. This is my target. But what do we do now? We plan our strategy into the finest of detail. We write it down, we know it, and the moment we start executing with real money, we start forming opinions, we start listening to other people's predictions. Where do we run? If the trade doesn't go your direction immediately, you jump onto YouTube and go and listen to what everybody else is saying about a specific instrument. That's predictions. That doesn't mean nothing. And you don't start thinking because you didn't think. There is no thinking in trading. There's just doing and following your specific set of rules. Remember, on the end, strategies doesn't make money. People make money. Think about that. I'll take 20 people. I'll give them the same simplistic strategy, broker, laptop, money, account, everything. I'll give them the same conditions to trade in. I'll give them this one strategy and I'll teach them that to make sure they understand it. I'll put that 20 people in a room. I can promise you at the end of the day or the end of the month, I'll have between 15 and 20 different results. Because on the end, people influence their strategies. Every strategy that you backtest will make money most likely. You will be the worst link, and I have covered that on your personal psychology. So make sure that you are not the reason that your strategy fails. On the end, when you develop a strategy, you must understand that your discipline and the rhythm and your position is the most important thing in the market. Think about it. Your discipline, your rhythm, the rhythm of the market, and then your position. It's the most important thing there is. Defend it with your life. You cannot lose those three things, because if your discipline is gone, you'll do stupid things. when the rhythm of the market, because usually what happens, the rhythm is you wait for retracement, for argument's sake. You start to get this entry, you take the entry and the market starts to go, and you suddenly exit the trade because things look different, or you had an opinion, or you read some commentator, or you think something, and you exit the trade. The next moment it starts to run. What do? You chase back into the trade. And now your rhythm is completely stuffed. Because now you don't have the original stop loss anymore. Your position sizing most likely is wrong because you were running in and out of trades. So make sure that your discipline and that rhythm and that position, don't give it away cheaply. That position is everything. You've worked hard for that position. So when you think about your strategy, remember that those things you must defend with your life. You cannot let it slip. Never ever. Without that, you will not be able to follow your methodology or your strategy. And ultimately, the market's going to punish you. I can promise you the market's going to punish you for that behavior. It is important to make sure that your method that you design suits your personal emotional abilities, your emotional tolerance, your financial position, whatever your situation is financially, and the time that you've got available, and also your skill level. So make sure when you design your strategy and decide on which 3, 4, or 5 or 6 strategies you're going to trade, that they fit you as a person. I know it's nice following someone else's strategies, and that's where you should start. But during the years, as you build experience, you will be adjusting those strategies to suit your own personal financial position, emotions, and your skill level.